Well, they had a wonderful way of getting into this, and now they're faced with a situation where prices are going sky high. We're starting to run out of everything. We have structural deficits in silver, platinum, palladium, and I suspect there's also a structural deficit in gold that they're not talking about. So all of a sudden they're mega short and losing billions of dollars of unrealized losses that they're holding short, and we're running out of silver. They've reached the end of what they can cover without driving the price to the moon. So where we go from here and how soon, I have no idea. But sooner or later, they're going to have to step into the market to cover their shorts, and other people are going to have to cover their short positions. And in the process, the price is going to blow through 100 and never come back. This massive short position in silver, which is just absolutely grotesque. Okay, people, the banks and stuff, they've been short silver since it was like $10. So their unrealized margin call losses, they haven't booked them yet. They just keep rolling them over into the years. And if you were short at $20 and at $120, you were short, your margin calls, it's $1 for every ounce that you're short. And, some of these bullion banks were short like 5,000 contracts, which is 25 million ounces. And you take a price of $25 or $20 and silver up to 120, that's $100 times 25 million. We're talking serious money here. And the big shorts were screaming in pain, and so were a lot of the little ones. So the boys came into the market on the end of January and absolutely killed it in order totally to save the shorts. But the problem is, back in 1975 when they started this price management scheme, they had this wonderful idea. We'll have this paper gold, and we'll get people to buy paper rather than buying the physical metal itself. And that worked like a charm, and it worked like a charm for 52 years. But, what's happened in 52 years? The world is a totally different place. Russia, China, and India weren't the powerhouses, the economic power and financial powerhouses they are today. The population of the world is doubled, and there's more demand for everything. So, they had a wonderful way of getting into this, and now they're faced with a situation where, prices are going sky high. We're starting to run out of everything. We have structural deficits in silver, platinum, palladium, and I suspect there's also a structural deficit in gold that they're not talking about. So all of a sudden they're mega short and losing billions of dollars of unrealized losses that they're holding short, and we're running out of silver. What in the sixth year or structural deficit? Everybody knows that. And it's just a matter of running into a physical brick wall sooner or later. And we started seeing signs of that in January and December. And they have no exit strategy, none whatsoever. If they go in there and try to cover the shorts, we're going to see a three-digit or silver price that you frankly can't imagine, and which would bankrupt all of the financial institutions that are short, which is the reason why Ted Butler wrote that essay. So I have no idea how they're going to get out of this. And Ted and I had discussions about this over the years. And there's only two ways out of this thing. Either the Exchange Stabilization Fund comes along and saves them. The Fed saves them, prints the money and says, here's the money, your $1 trillion or whatever you guys are short en masse. Or they have to close the LBMA and the COMEX, and that way they can save the shorts. We saw that in the nickel market in London, 2 or 3 years ago, and there's no doubt in my mind that in order to save the banks, the too big to fail banks, that they would pull something silver and silver, gold, and platinum. But like I said, there's just no exit strategy. And right now they're doing all they can do. If the price gets up there, they hammer it lower. But the law of supply and demand dictates that sooner or later they're going to run into the problem that the physical metal just isn't there, and we're already seeing that in silver. There's certainly no question about it. I should have looked at the stats before I came. I'm just going to pull out a piece of paper I write this down on, because some of this stuff you have to physically write down. You go back to, the 8th of July last year, the 8 largest traders, were short 84,000 COMEX contracts in silver, which is like over 400 million ounces. Now, that was last July. As of last Friday's COT report, they were only short 47,000 contracts. They have reduced their short position by 37,000 contracts, and the only way you can reduce a short position is either deliver into it or buy along to cover it, okay? And that's what they've been doing. If you want to know why the price has been rising, is because the shorts have been covering, and the shorts that have been covering that are most noticeable that I can see on a weekly basis are the 8 largest traders trying to get out of their short position, but they've got to the point now where it's getting more and more prohibitively expensive to cover their short positions. But there's no question out there's been huge short covering going on since last spring. It started, and that's why the price has been rising, because the banks all of a sudden started going into the market and quietly buying it up. And in the process, they ran the price up to the point where the speculators started to jump in the market and say, man, goodness sakes alive. And we were seeing prices going up, $5 or $10 a day. And I remember, I don't think silver ever closed. The last day it closed at 70, and the next time it closed it was at 90. I don't think it ever closed at 80 on the way up. Okay, so the thing is that once it got hot and heavy like that, instead of letting the market clearing event happen, where the shorts got burned, okay, and the longs made made their profits, which most everybody is long in silver. There's let me just look at it. I got it right here. In silver, in the commercial category, and these are the bad boys, the guys with the black hats, there are 45 traders in the commercial category in total. That's all. Of thousands of traders that trade in the COMEX futures market in silver, 45 of them are in the commercial category. And if you take out the big 8, you've got 37 left. And those guys, those 37 traders that are left are net long silver. So you've got 8 traders that are keeping the price suppressed. It's them and nobody else. Everybody else in the world, including you, me, and everybody listening to this podcast, is net long in the shares, in the options market, in the futures market. We've got physical silver up the wazoo, and the only thing preventing it from going higher are those 8 traders. That's it. In gold, it's very similar, except the big difference in gold is that there are 49 traders in the commercial category that are short, okay? And every single solitary one of them is short the market. Everyone, like there's the big 8 and all the rest. So the big 8 plus 41 more, they're all short the market against everybody else of the thousands of traders that are long. And they're short about just under 50% of the entire COMEX futures market. So, they've been covering their short position, but they've got to the point now where if they try to cover anymore, the price is just going to get away on them, because the open interest in both silver and gold is at historic lows going back 10, 12, 15 years. It's, they've reached the end of what they can cover without driving the price to the moon. So where we go from here and how soon, I have no idea, but sooner or later, they're going to have to step into the market to cover their shorts, and other people are going to have to cover their short positions. And in the process, the price is going to blow through 100 and never come back. Have an export permit for X number of ounces of silver, or they're allowed to export what percentage of their product out of the country. So you have an export license from the government. Okay, and there's 10 or 15 or 20. I don't know how many there are, but there's a finite number of them. There's not very many. So they're allowed to export either a fixed amount of silver or whatever they want to. I'm not sure what the rules are, but what the government grants, it can also withdraw. And the thing is that, as we get deeper and deeper into this silver deficit crisis, I can see the day coming easily when they pick up the phone or send out the emails to these companies, say effective whatever day, you'll only be allowed to export, 50% of what you're doing now, or 30% or whatever, because we're just running out of silver. And if you look at their stockpiles on the Shanghai Gold Exchange, we're at rock bottom right now. There's almost nothing left. So if they wanted to, they could do it, just not out of spite so much as, to save their own skins, because, they have only a certain finite amount of silver they make, and they've been net exporters for many, many years. And, they can only keep that up for so long before they run into this rapacious demand for silver. From what I see talking to the retailers is that the refiners are only, like you just mentioned, they're only taking 3 nines or 4 nines, mainly because the problem is the fact that the price is now so volatile that, they could promise They could say, okay, fine, I'll pay you $90 an ounce for your 90% pure bullion, okay, your American coinage, and they could take it, and it takes 6 weeks or 5 weeks or 4 weeks for them to get it refined into good delivery form or a product that they can sell. In the meantime, the price of silver has gone from $93 down to $79. So they're just saying, look, we just can't do this anymore. I mean, we're losing money on this. I mean, the prices are all over the map. So, you know, what they do is the reason they're taking the 3/9 and 4/9 is they can take the stuff and they can throw it right in the melting pot and have it out the door in a good delivery form of whatever, whether it's good delivery bars or whatever they're making that day. But they can do it quickly so they can lock in the price that they bought it at and also lock in the price they're selling it at within a 24-hour time period. So, you know, the amount of these, you know, coinage, whether it be Canadian, American, or European, or whatever the heck it is, the time to process it, okay, between the time that they lock in a price and the time they sell it is so enormous that they can't guarantee that, okay? And so that's the main reason, okay, that if they had a steady price, they could probably do it all day long, but they don't have that, and they're tying up a lot of money. And it's, you know, if they take a flyer at $100, who guarantees it's going to be $100 by the time it's refined in good delivery form and hitting out the door? Where do you start on this? Let's go back to LBMA, and was it December or November? They run into a problem where they were supposed to have X number of ounces, and it all of a sudden became not available. And so they had to fly in like oodles of tons of silver from the U.S. and Switzerland and China and all these places. And so they didn't have to declare force majeure. But the giant sucking sound that you hear every day when you get up in the morning is the sound of silver disappearing out of all of the ETFs and mutual funds. It started in October, it increased in November, it increased in December. It has not stopped in January. I put these numbers are in my column every single day. In January, just to give you an idea, in all of January, the COMEX received 8.443 million ounces of silver, but shipped out 51 million. Okay, and in February, they received only 3 million ounces in all the depositories, and there's about 8 or 9 of them. And they shipped out another 51 million ounces. So in 2 months, okay, after the squeeze is over in the LBMA, the COMEX has parted with 102 million ounces of silver. That's a lot. And let me just go to gold for a second. In January, they only received 80,000 ounces at the COMEX, but shipped out 858,000 ounces of it. And it's even worse in February. They received 152,000 ounces, but shipped out 2.6 million ounces of the stuff. So the sucking sound is not confined just to silver. In the COMEX, it's gold as well. And if we want to go overseas to the Shanghai Gold Exchange and the Shanghai Futures Exchange, I've got the data for tomorrow's column right in front of me right now. And the Shanghai Gold Exchange and the Shanghai Futures Exchange both shipped out metal during the last week, quite a bit of it. And my comment here is that combined, the Shanghai Gold Exchange and Shanghai Futures silver inventories are back to what they were in October of 2015, which is ultra low compared to what they held in the past. They're scraping the bottom of the barrel. They're almost out, okay? And how much silver is left on the COMEX that they can ship out that is, because they can only ship out silver that the owners are prepared to send out. Sooner or later, they're going to run into a brick wall that nobody's prepared to part with their silver. So this sucking sound has been going on absolutely everywhere for a very long period of time, and not just these two, not just the COMEX and not just the Shanghai Gold Exchange or the Shanghai Futures Exchange. All of these silver ETFs have been puking up silver for the last 3 or 4 months.